Cryptilians and crypto crackheads, today is Tuesday, July 13, 2021, and you're about to get Timified. So before the initiation of Timification, try to remember to turn up the playback speed to ×2 speed, and for non-native English speakers, turn it up to 1.5 times speed. And I say that for your viewing pleasure. So let's go ahead and jump into this video. What we're going to do here today is go over other indicators that might be giving other signs as opposed to the clear pressure down. Series of higher lows. Most things are pointing down. Pressure's down, 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 down. As any trader out there has been saying, it looks pretty bad right now, right? Okay, so however, there are a mix of signals saying that this has a chance to go up, but the ratio of signals of bearish to bullish, I mean, it's at least 80-20, if not more lopsided than that, right? So most things are pointing down. It really looks like price wants to break down. However, so let's go over a few things that might give a different mix, is what I'll do in this video. So this, a lot of times with pattern trading, it's a bummer because you have to move your lines all the time. So a lot of folks trying to play a triangle after a downturn, the first three, little areas here, they draw a too aggressive of a triangle, and then during the dip that forms the actual second point of the ascending triangle, it's a surprise to them, and they have to redraw their triangle, and the triangle just gets longer, meaning it'll stay in consolidation for longer than what they had been anticipating if price dipped down and made two higher lows to that effect, right? And then it drops down farther, and then your triangle gets spread out. So in pattern trading, that happens quite a bit. And I can see here that we might have two triangles. The inner triangle does not connect to here. So this does indicate that these three areas here, they developed too aggressive of a triangle, namely this one. It looked like that was going to be the triangle. That broke down. You had to redraw your triangle, just got longer, which means consolidation is going to take longer. And a lot of people took on shorts there. And what happened when people took on shorts? It went up significantly. Let's see the percentage there. So 7% little run after a breakdown out of this small triangle. Then folks redrew the triangle after they realized, oh shoot, it didn't break down and keep going down. And now on this one, it wicks down almost exactly to the point which would connect perfectly with that first dip. Currently the year's low. And I think this point actually tied the exact previous year's high. The yearly high and the yearly low right now, I think, are almost identical. Actually, let's go back and take a look at that. Pretty sure that's accurate. It's kind of weird that that's what it dipped down to. January. So that's the first candle on the second. So it got as high as about 29,830. And I bet that 4-hour candle closed or went down to 28,852. So within less than $1,000 difference. So it actually went lower than last year's all-time high. Last year's high. Okay, so that is one sign of hopium. That this triangle could be just growing, and this was the true triangle all along, and you couldn't see it until now. It happens quite a bit. Am I grasping for straws right now, trying to come up with bullish cases? Absolutely. I made very clear at the beginning of this video, the pressure's down, but we're looking for signs, potential signs that might create a different ratio of bearish to bullish signs in general, right? Okay, so let's go over to this. I'm using a free service here at Crypto Quant. It's a pretty cool service. It's essentially, you can pick among a lot of the fancier indicators that other crypto traders out there use. So here are a couple things that I found interesting. Let's start at the bottom of my favorites list. Oops, sorry. There we go. All right. I don't know how I got off that chart. Okay. So this NVT here, it looks like price begins getting confident once the signal, the orange line, can get above and have a retest, like a test down, and right around that point is when price starts to pick up, at least in this reiteration here. And so you can see it here on this jump up in price. The orange line had gotten above the neutral line before that jump up. And what's happened recently during this downturn here is the orange line has tested above, came back down, formed a higher low, coming up again, formed another higher low, and is popping up, which would indicate that there is a strong, there's a decent chance, at least, you know, in the reiterations of this graph with the NVT signal, that this cross here is about to get initiated, and there might be a slow, you know, climb up, in which the daily 10 EMA would go above the daily 21 EMA. So this is indicating that there's a decent chance. So that's 1 point for Team Bulls here. So essentially Bitcoin divided by the dollar amount of stablecoins. It says a number or an increase on the yellow of the orange line means an increase in selling pressure. So when the number is low, the orange line is low, that means there are more stable coins because that's the denominator. It's Bitcoin divided by the dollar value of stable coins. And if the denominator is bigger, like 1 over 100, right, that means the number is going to be smaller. Sorry to play Sesame Street, but just a lot of people, you know, with math, I thought I'd break it down very easy. So the bottom number is bigger. So that means there are a lot of stable coins chilling on exchanges, which means people are prepared to buy, at least on this graph. All right. Or gamble their money on futures, because you got to have a stable coin to do that usually, or actual fiat. Another interesting thing for Team Bulls is miners, given that China has had its deal, you know, kicked miners out of the country essentially pretty firmly this time. So that has something to do with it as well. But in general terms, those miners who are moving out and the other mining community, this is all-time lows of their selling pressure. So miner sell pressure used to be the sell pressure, like the big kicker that could stimulate when the bear market began. So they still pull some weight, not as much as these institutions with multi-billion-dollar buys and stuff. But that's another small point for Team Bulls, is that the sell pressure from this fairly large group of individuals is extremely low right now, as stable coins are chilling at also maybe, I don't know, record lows, but record lows per the last year and a half, chilling, waiting to make buys. NVT signal indicating that there might be a small crawl up of price before price actually increases, given these series of higher lows and breaking the black line here, horizontal line. And no, I didn't just fish for things that gave bullish signals. I favorited these a couple weeks ago. So here's a point for Team Bears. An increase in this number means an increase in pressure from whales. So it's making a pretty high point. So let's look at these other high points here. This high point got the exact top. This high point got the exact top. This spike up here marked that race up to the daily 200 EMA when Bitcoin got to 40K. It marked it almost perfectly, not quite as perfectly as these. So a few of these tops did indicate a pretty big drop. However, look at a few other tops. This had price crawling up. This had price crawling up. That had price, actually that had a pretty big dip in Bitcoin right there. This one was related to a pump up. This one here was after the dip happened, right before a rush up. So in moments of high times, it looks like the trend is it could mark local tops. But during times of consolidation, once you start getting these spikes that are outliers compared to the recent history of the orange line, this last consolidation, these spikes up marked when Bitcoin price started moving up out of consolidation. And we've gotten two big spikes here during this consolidation. So that's kind of hit or miss. I might be, again, grasping for straws. However, the last few reiterations, a spike up did, it was right before a crash. So this could mean that whales are preparing to take on shorts and then sell their Bitcoin and buy it back up wherever, at 21K, 19K, whatever, whatever low point that you're guessing. I'm still thinking like 23.8 would be a low point, and I think price is going to move up first, but that's what we got there. All right, so here is something, actually not this one. So here's something kind of interesting. So the amount of Bitcoin transferred to exchanges wallets since this point has been increasing on average. So a best fit line would be a positive slope. It's increasing. And it started increasing as this graph over here started decreasing. So let's look at the difference. Like, there's divergence in these graphs. All exchanges, inflow address count. So this represents the number of Bitcoin addresses. So in terms of the little people, right? We little people. The addresses, regardless of the amount of Bitcoin in each, just the raw number of addresses making inflow transactions to exchanges. So on average, the typical person or institution, on average, regardless of the Bitcoin amount, the average wallets, they're not putting Bitcoin on exchanges to sell. So that shows sell pressure is dropping drastically, at least from the retail market. That's a good sign. That means it's possible that capitulation has happened, because people have sold everything, and who's going to sell, right? All right. However, the concerning thing is, as this is going down, this number of the actual amount of BTC is going up. That means whales or institutions are putting their Bitcoin on exchanges, and they're doing it in very few amount of Bitcoin addresses. And that's related to the spike up on the whale ratio. So this divergence here, it's kind of weird, because retail folks are not looking to bring their Bitcoin on to sell anymore, but whales seem to be preparing to do so. So I would still count that a point for Team Bears, honestly, even with that divergence. So this steady drop in BlockFi wallets means that there's a waning interest in crypto, which could be related to fewer people putting Bitcoin on an exchange, because a lot of people have been washed out. So a few of these say, either we've seen capitulation, or it is potentially, it's kind of indicating it's possible that capitulation has been seen in terms of the interest of the general crypto retail investor or amateur investor. This is kind of similar, just the total amount of BTC held in exchanges wallets. This is a different type of graph, so it's still saying that there's a downtrend, but it doesn't relate very well to the number of addresses putting Bitcoin on exchanges, and it does not relate well to the stablecoins ratio, meaning that there's less Bitcoin per stablecoins on exchanges. This still seems like it's plateaued pretty high here. So it looks like the whales have a lot of Bitcoin on exchanges, but retail investors do not. But retail investors do have Tether on exchanges, it looks like. All right. So if retail investors are poised to buy with a bunch of Tether and not flowing their Bitcoin to sell on exchanges, What if whales truly are printing the exact shapes they wanted, and retail investors are primarily ready to buy? Why would you, as a whale or a cartel of whales who are printing exact Wyckoff patterns with your algorithms, with probably exchanges assistance, why would you push price down if the average retail investor is clearly ready to buy as opposed to sell more Bitcoin so you can take it? So this whole Wyckoff thing is so that larger players can accumulate Bitcoin at lower prices before letting go of this Wyckoff pattern and the sense of sell pressure that is being, I guess, fabricated legally, because they can sell their Bitcoin as well. But it just doesn't make sense with these graphs that if retail investors are ready to buy, that a cartel would tank the price, because that would allow retail investors to accumulate as well. And it seems like the average retail investor has already been scared out, and the people who are going to sell their Bitcoin have already sold. Therefore, their accumulation plan wouldn't benefit too much from taking the price farther down, because then you're buying in competition with a bunch of retail folks with a bunch of Tether, or I don't want to say Tether, a bunch of stable coins ready to lock and load. So overall, the big thing here is that the whale graphs and the retail market graphs are completely in opposite directions, which makes me think that if I were a whale, I probably wouldn't crash price anymore. I would probably try to get the gamblers with Tether to take on shorts before I bought it, since tanking the price further doesn't really help me because there are too many people ready to buy. How about I just scare down and take on longs before I buy back? So what do whales need to do in order to take on enough longs? They need enough shorts to be on the market. And look what's been happening. Shorts have been raging up. So it might be close to the point that if that truly is the plan, and the connections I'm making to create a bullish case, right, which could end up biting me in the butt, but I'm not saying I'm convinced of the bullish case. I'm simply presenting an argument of why it could happen, right? I don't think it's probable that a bullish case happens. I mean, because the charts are pointing down. I want to be very clear with that. However, there are some hints showing that this suppression down might be getting pretty mature, and that whales might be able to make more money if they get a bunch of people to short so they can take on longs, because that would be of more benefit to them than crashing price farther down where a bunch of retail people are ready to buy. That's against the entire point, right? And so look at what shorts are doing, screaming up. The weird thing about this, why it's not conclusive, is because longs have broken all-time highs and plateaued. So if it broke out of a range, and it doesn't look like it's going to come down. So this looks like there's just that much more money in Bitcoin in the futures market. There's just that many more dollars, which does align with people holding more stable coins prepared to buy Bitcoin. And it looks like some of those stable coins are already put into light long positions. People dollar cost averaging longs, essentially. But they also have Tether ready to buy a dip. Hopefully not all their Tether's locked up in a long, because they're going to get destroyed potentially. So it's not totally conclusive, but if the Bitcoin cartel's plan is to take on long positions only after scaring people or getting people confident that there's going to be a drop per breaking through a triangle, you have a bunch of signs and strong hints saying that that's about to happen. From the graphs we looked at here to the shorts skyrocketing, meaning it's getting close to the zone where those interested people have taken on enough longs, and then they start buying the asset because they can only take on enough longs if there are this many shorts, it looks like. So it's reaching the whale zone of when whales are interested in, being done with taking on more and more long positions before market buying Bitcoin. Okay? Now, in general terms, though, Bitcoin is producing lower high after lower high after lower high after lower high after lower high. It's creating higher highs, even though this one looks like it almost tied that. I mean, not higher highs, higher lows. Yeah, it's still higher low. Still technically higher low. Not on a closure basis, though. And so pressure is absolutely down. If you look at something super simple, such as the 4-hour 89 EMA on Bitcoin, this 89 EMA has been a pretty clear representative of a ceiling since this big drop down. So let's take price off so you can see what I'm saying. So here, the monthly 10, which Bitcoin broke below it at the very end of June, and guess what that coincided with? That squeeze right there. The 89 with the monthly 10. So look at this. It's not a technical squeeze, though. I guess a resistance. So this became the resistance. It bounced off and closed below the monthly 10. Oh, no, this was still June. Right there. Closed below right there. So this acted as a resistance to this. And it looks like it's now in a squeeze play. Squeezing price below this battle line, which is a 2-week, it's a bi-weekly line. So you can see it lines perfectly with all these candles here and almost with that wick. So the 4-hour 89 EMA kept price essentially below the monthly 10, drove it down to close below, which is very bearish. Month of June closed below the monthly 10 EMA. And now the 4-hour 89 is getting ready to, it might have just squeezed it down. Because, I mean, this is a pretty small space to be in. So, if things are going to turn around, getting some pretty positive closures above the 4-hour 89 EMA is going to be what you're going to look for. That's going to be your absolute first sign that expansion is going to happen up. Like some strong closures. And it doesn't bust back through its first retest, which is done every time. It just busted, well, I guess it tried to hesitate, but it still busted through on the first way down. It wicked and then busted through. Tried it again, got rejected. So focusing on this 4-hour 89 EMA is going to be, I think it's going to be a primary clue that the hunch, the possible hunch, even though it's not a probable hunch, the hunch that whales will benefit less from tanking price because people are not only taking on a bunch of shorts, they're going to make money too, but they're prepared to buy Bitcoin as it's falling and take profits on shorts. That's not what whales are here to do. They're not here to help you make money with them. They're going to make money when you don't make money, right? By taking on longs right after they dump price, so people are taking on shorts. So if that hunch ends up being correct, the first sign that that's going to be ended up correct is Bitcoin can stay above this 4-hour 89 EMA because this is coming to a close real soon. I mean, as in the next couple days. So this line could be below it by the 17th of July. That's the end of the squeeze. 17th of July. It's got to happen soon. And that would mark the beginning. So that would mark the last day of this trading week. It would be Saturday, I believe. So the end of this week, beginning of next week, is probably when this is going to happen, if not now, really. It's got to happen soon. but it could go as far as the end of this week or very, very early next week, where you have like a fake out down and then it pops up, fakes out a squeeze play, which has happened. Let me show you one example of a fake out squeeze play. Dogecoin on the daily just had a squeeze play out, a very nasty one, with the daily 89 and daily 10. I was doing a all YouTube live video. I said, hey, this looks like it's going to squeeze down. It might be a very massive move, saying that about here, and I ended up getting a massive move. And honestly, Dogecoin is probably just going to, looks like it's going to keep going. However, there have been some fake outs during a squeeze play, like right here. Looked like it was going to trend down, and then it just popped up. However, I don't think that was the squeeze I was looking for. This one right here. So a lot of whales know that people like to take on shorts after a bearish confirmation or a bearish EMA cross, right? Even though this is probably not what was happening, it might have been what was happening, who knows? But whales know that bearish crosses of EMAs are big plays for people to put on shorts. So with that 4-hour 89, taking price below that point, the fake out could come right there before it pops up. So there are fake outs on squeeze plays as well, and that's the logic behind it. Because a lot of people play that cross to the downside, similar to the upside. It's not an unwise thing to play certain EMA crosses either. Even though they don't always happen this immediate, right? It doesn't just like go to the moon like Dogecoin has done recently, especially in Bitcoin. But they're very, very, very common plays. But I wanted to show you an exact example of a fake out, so that if you are a person holding on shorts right now and you're thinking it's going to go straight to the teens, just be careful, because that fake out could end up happening here. All right, and that's probably about what it would look like. Maybe using something more like the daily 10. Let's go to Bitcoin. Oh, no, it's the 2-day chart, right? It's the 2-day 200. Yeah. So the 2-day chart is getting ready to squeeze price as well. And it's coming to a culmination. It's coming to the end. There's not much more space. So this might be the actual major squeeze play. However, within the chaos of what happens in a 2-day time frame, the 4-hour 89 roughly aligns with this so far. So let's go to the 4-hour 89. And I think it might be a better signaler than looking at the 2-day chart, although I think the play, technically, in terms of a cross or a squeeze, is happening on the 2-day chart on Bitcoin. But you can see how I drew that, and it lines up almost exactly with the 4-hour chart. So that's why I keep saying the 4-hour chart might be the chart to look at. One more potential, grasping for straws bullish thing. Not really bullish, but hopium, I guess. Is on these last tries up, Ethereum has been underperforming Bitcoin on these pops up. So on the 15-minute chart, on these recent pops up, or, failed bounces, right? Bitcoin got to this EMA on this pop-up. Bitcoin got to this EMA on this pop-up, like did this, but up here, right? Not just wicked past it, because clearly the Ethereum, I'm on the Ethereum 15-minute chart. Ethereum wicked past it, but Bitcoin consolidated under it. And then this was the first instance that Ethereum went to the same point Bitcoin did. So Bitcoin went to blue, purple, blue, while Ethereum just went yellow, blue, blue. All right, so let's look at Bitcoin. Blue, purple, blue. So Ethereum finally went up as much as Bitcoin. However, right now it looks like Ethereum is underperforming Bitcoin because it actually made a lower low. And let's see how much bullish divergence. So on the 30-minute chart, you have 1, 2, 1, 2, 3, 3, 4. You have 4 strikes of bullish divergence on the 30-minute. That doesn't happen very often. I don't know. That looks like Ethereum's going to get a bounce from there. that is not very common where you get 4 strikes. The 30-minute bullish divergence, I think it plays out more often than not, especially the 1 hour. So let's see what the 1 hour did. I bet it has 3 strikes, maybe 4. Nope, only 3. So 1, and this is the lowest point, an even lower price, but higher RSI, which is different or divergent, right? So RSI higher, price lower. It's diverging away from each other, high and low. So this way, divergence, right? That's what divergence means. And so this indicator down here is going up while this keeps going down, and you got 3 strikes of it on the hour. That's usually pretty good. I've made some heller trades longing this, and honestly, I might do that right now. I might go to my other chart and do that. So I probably want to end this video. I'm going to try this long. So I'm going to end this video here, but those are all my grasping. So I want to be very clear. This stuff is bearish. I was purposely and actively grasping for straws for a bullish scenario, just so that if that does happen to play out, we know that those hints in the future could hold some weight, especially when it has all odds against it. So I'm going to go try my luck at this 3 or 4 strikes of bullish divergence on smaller time frames, because they usually play out, and we will see you next time. If you liked what you saw, go ahead and subscribe. And if you do subscribe, let me know if you want to be a cryptillion or a crypto crackhead. You got to pick your crypto, not gender, but pronoun, and we'll see you next time.